Thanks for tuning into the Mutual Fund Show. I'm Niraj Shah. And as we told you in all the teases that we did for the show, the conversation today is pretty riveting. I think the budget, and we did some pieces around this immediately post the budget, because the budget seemed to be an infra budget. The point is, as we pulled out, and the question that we are posing to our guests today, the question is, are infra-sectoral mutual funds a good place to invest in, or is it another false dawn? Of course, we'll also be talking about the China Plus One strategy and how to play that through mutual funds. But I'm pretty kicked about the infra-sectoral funds because, over the last 10, 12, 15 years, there have been a number of false starts, and these can this time be different. It's also important to try and get an additional view on this topic and some other topics as well, something that we do every show. And therefore, let's get in Tarun Birani to talk about his thoughts as well on this. Tarun, good evening, and thanks so much for joining in. We were just talking to Mr. Sunil Subramaniam about for the last 15 minutes. And I would want your brief view on infra before we move on to the topics that we discuss every show. But first, a view on infrastructure funds. They've promised a lot in the past and failed to deliver. Do you believe that this time around could be different? Why or why not?
Yeah, good evening, Niraj, and thank you for having me here. So I have a very different view. I feel investing based on suitability is one of the most important part. It is not something one can jump in if it is like a herd mentality moving in the markets. I have observed that the infrastructure sectors in the past have not been a wealth creating sector, and normally when we look at long-term investors, we don't want anybody to tactically keep on moving in, moving out. So we did a rolling return research of across 10-year plus infra funds available in the market as well as the category. And to my surprise, there has been almost 26% of the times one should be prepared for negative returns with a 5-year horizon in that study. So that tells me that why can't I live without infra fund, and rather my fund manager in either a diversified large cap or a mid cap or a multi cap fund takes a tactical call in an infra fund, and that would be a better way. I continue to believe there is a strong momentum going on for infrastructure. I was hearing Mr. Subramaniam also. There are a lot of positive things which are happening in the infrastructure sector as we speak in our country, and this could definitely lead to a lot of positives. But at the same time, looking at the track record in the past, it doesn't give me a lot of confidence, and I feel the risk reward ratio, looking at the past historical track record, doesn't look that attractive to me. So I would rather play a infrastructure story through a means of a diversified fund rather than a sector specific infrastructure fund.
Okay, so viewers, let me try and distill this, right? Just so that you don't get confused also. Tarun's point of view is that because he wants his set of investors to try and make the best possible returns with the minimal possible risk, he's saying go out for maybe diversified funds or some of the other funds, because their analysis over the last 10 years, and Tarun mentioned the rolling return analysis as well, doesn't quite give the confidence to him to advise his clients to go out and invest into those funds, and there are better options available. If you believe in Mr. Sunil Subramaniam's argument, his argument is that he, in his experience and wisdom, believes that don't look at the past returns, because tactically, as per their calculations, the next few years might be great for infrastructure, and therefore you're going to time it well. So here's the key, viewers. If you believe that you can time these things well, and if you believe in Mr. Sunil Subramaniam's argument and do your own research, then you could go out and do it. Else, you might want to play it safe and play it the way Tarun was talking about. So that's the long and short of this whole conversation. Keep in mind, the budget gave a lot of emphasis on infra, so you have to keep that at the back of your mind. However, something that we're doing every show now, point number one, talk about one key mutual fund and the category surrounding it, of course, and the reasons for that mutual fund, of course, will be given by our guest today. And then talk about one key recommendation from his end, something that he or she is telling his particular set of clients. We'll get a disclaimer from Tarun about what are the set of clients to which that fund would be suitable as well. But point number one first. And Tarun, I think you've chosen the Kotak Emerging Equity Fund, which is apparently one of the best performing mid-cap funds. Can you talk a bit about this fund? And if people have this fund, what should they do? If they don't have, what should they do? And then, of course, if you can also give us a sense of the category.
Sure. So, Neeraj, when I look at selection, you asked me to select a category and to select a fund. So, while doing that exercise, I thought of a category called mid cap, where I see in terms of valuation compared to a large cap or a blue chip category continues to look more attractive to me. And I see possibility of getting better returns in this available sector. So in the mid and small cap strategy, one need to be very careful in terms of the risk portion. The risk will be comparatively much higher compared to a blue chip or a large cap category. But while observing this category, what I did as an exercise was I selected all funds with a 10-year plus track record. And in that 10-year track record, the top 5-6 names which came across, I tried doing some analysis on that. And my analysis was mainly focused around two factors. One was a quantitative, another was a qualitative factor. While doing that quantitative analysis, I looked at various factors like trailing returns, I looked at rolling returns, I looked at downside capture ratio. While doing all these exercise, what I feel right now, the momentum is strong, and we feel that next 5 to 10 years, you could see greater returns coming from this category. So I would like to go for a fund which can capture the highest upside in coming years. That is what I am looking at. Again, you can see that this Kotak Emerging Fund has delivered almost 21% times more between returns between 15 to 20%, and it has delivered almost 48% times. I think it is written wrong, not 4.86. This is 48.6% times. It has given more than 20% return. So that again gives you a lot of confidence. The kind of risk you are taking, the rewards are also handsome. What I like again was the team which is managing this fund has a good track record for almost a decade, and they are managing continuously this fund. So they have been doing it with a purpose. They have been doing very smartly. So that is also one positive thing. Again, the diversification, since in mid cap strategy you can go wrong also. So you need to be much more diversified compared to, let's say, a blue chip strategy. This fund has maintained that diversification, and they end up taking almost 40 plus stocks in the portfolio. So that is again a positive which I like. The risk management of this fund is very good. As we speak currently, they are also bullish more on the cyclicals and the infra oriented theme, and almost 45% of the portfolio is positioned there. So I would like to play the mid cap strategy with this kind of structure. That is my argument. Yes. Again, the process flow is good, people flow is good, risk management is good, and the performance has been good. And the upside capture ratio is good. And in terms of downside, we looked into last year when the COVID happened, mid cap category was down almost 40%. This was down 30%. So again, the downside capture is good in this fund. Yeah.
Those numbers look pretty interesting, and therefore, thanks for this argument. Viewers, keep in mind this while Tarun is recommending the Kotak Emerging Fund, this is essentially a call on the category, and therefore a fund within that category, and the fund which is amongst the best. Now comes the key question about what is it that TBNG Capital Advisors is advising their clients to do. And out of the plethora of funds that they may be advocating, what is that one standout fund at the current point of time? Why so? And what kind of people can apply or can invest in that fund? Tarun, I presume you are recommending the Parag Parikh Flexi Cap Fund. Why this one? And what kind of investors can apply to this?
So, Neeraj, we were trying to understand in the environment where we are in currently, what kind of strategies can win. And in that, we reviewed a lot of strategies which are India's only centric set strategy versus strategies which have the flexibility to go outside India also. So under that strategy, we came across this fund called Parag Parikh long-term equity fund, and which is renamed as FlexiCap fund. The good part about this strategy is they have almost 30% of their allocation outside India, which I think in last 3-4 years has captured the imaginations of Indian, and that there need to be allocation outside India. There are so many good companies outside India where as an investor, why I should look at only India, right? So keeping that in mind, we felt a global kind of allocation really adds and bring more downside protection. And when you look at this fund's downside protection, we did this analysis for last 5 years. The downside protection is just 40% compared to the average downside, which is at 70-75% for most of the other funds.
What does that
this
mean,
is
Tarun?
like
What does that mean?
this means when the market goes down by 10%, it goes down only by 4%. So that gives you a lot of protection in the downside. At the same time, it has a upside capture ratio of almost 75% kind of ratio, which again gives you a power that if market goes up by 10, it will go up by 7.5% plus. Again, this fund under its mandate, it can go all out in India also. While talking to that fund house, we realized that they only have one scheme in the overall platter. They don't have like 30 schemes, 40 schemes. So that again gives you a lot of confidence that focus is much more in this kind of category. Again, they have been very contrarian investors. I have seen them taking in 2018 some amount of defensive calls also, because they were not comfortable with the valuation at that point of time. So they are ready to take contrarian calls also. They picked up a stock called ITC when nobody was looking at it at 150, 160 rupees. But at that point of time, the dividend yield was attractive. Their hospitality business was, again, most of the pain in that sector was over for them. That's why they looked at that as a value stock. And today, as we speak, that stock is up 50% from that level. Yes, entire market is up, but I like the way they look at capturing the low PE stocks or value stocks in their portfolio. So that is another good thing. They compared to Maruti in India. In terms of valuation, they like Suzuki. So all these gives me a lot of confidence. The why as an investor, I need to be restricted only to India. I need to actually look at an investment opportunity across the globe, right? Why should I restrict myself?
And this could give you a combination of both. And I think that's a pertinent point. Well, Tarun, we'd have loved to talk more, but out of time completely on this show. But we've captured most of the things that you wanted to say. Any risk factors very quickly, Tarun, for either in a minute in the Kotak fund that you spoke about or Parag Parikh, any quick risks that you want to point out?
So as an equity investment, if you don't have, from a suitability point of view, if you don't have a 5-year plus horizon, please don't look at equity investment. And you need to be aware that last year, equity as a strategy for some point of time has delivered 30 to 40% negative returns. If you don't have the guts to bear that kind of loss, don't get into equity. Don't get into paper loss and paper profit kind of concept. Plant it like a tree, keep watering it, then only you can generate long-term wealth creation. Thank you.
Okay, well, that's true for equities in general, I would reckon, and Tarun recommending that for the two categories that he spoke about as well. Tarun, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time.
Thank you, Niraj. Thank you so much.
And viewers, thanks for tuning in to this leg of the Mutual Fund Show.